Hello and welcome to Free Lunch here at Zacks. I'm your host, Ben Rains. The US and China trade war took center stage once again Tuesday, as it has for over a year. All three major US indexes slipped over 1% through mid-morning trading. The fall came after the US added 28 more Chinese companies to its export blacklist. The blacklist, which already includes telecom giant Huawei, means that US suppliers are banned from selling technology that originates in the US to Chinese firms without a license. The new group of nearly 30 entities has been placed on this list based on their role in Beijing's continued repression of Muslim minorities in northwest China. Facial recognition powers and video surveillance giants are part of this group. Clearly, this is not directly related to trade, but Tuesday morning's declines show that Wall Street is worried that the move will hamper the upcoming high-level trade talks that are set to begin Thursday. However, Chinese officials have already confirmed that they plan to go ahead with the trade talks in the wake of the new blacklist. At this point, everything still seems up in the air, even though China began to make some of its largest purchases of soybeans in over a year recently. And President Trump said Monday that there's certainly a good possibility a deal could get done. Meanwhile, geopolitical concerns continue to mount, now with the spotlight on Syria, Turkey, and the U.S. support, or lack thereof, for Kurdish fighters in the region. Meanwhile, protests in Hong Kong rage on, and now the NBA, which has become the most popular sports league in China, is in the middle of the dispute between mainland Chinese government and Hong Kong. Over the weekend, Houston Rockets general manager Daryl Morey tweeted his support for protesters ahead of preseason games in Japan, China, and elsewhere. Chinese sponsors then announced almost immediately that they would cut ties with the Rockets and block their games from streaming TV services. The NBA and Commissioner Adam Silver have responded multiple times, including Tuesday morning, trying to walk a tightrope between business interests and free speech. This will certainly be a situation worth monitoring for everyone, as it has become a microcosm of the dispute between US and China. Moving on, the National Retail Federation said last Thursday that it expects US holiday shopping sales to climb between 3.8% and 4.2%. This would compare favorably to the 3.7% average over the last 5 years and top 2018's disappointing 2.1% growth. Meanwhile, the national vaping crisis seems to have come for already shaky marijuana stocks. All four of the largest Canadian cannabis stocks, Aurora, Cronos Group, Tilray, and Canopy Growth, have tumbled over 20% in the last month and more than 40% in the past 3 months. Looking ahead, Delta is one of the only major companies to report its quarterly earnings results this week. Shares of Delta had been on a solid run in 2019, but the stock has slipped over the last week after it released some updated September quarterly estimates ahead of Thursday's release. And that does it for the news portion of Free Lunch, but stick around for today's new Zacks Rank #1 Strong Buy stock.
Investors are always on the search for the strongest stocks. And here at Zacks, we believe those are our Zacks Rank #1 Strong Buy stocks. To access the full list of strong buys, simply hover over the Stocks tab on the Zacks.com homepage. Select Zacks #1 Rank from the drop-down menu, and you will see the complete list. From here, you can sort by the date the stock was added to the list, or by specific metrics, such as market cap. Have a question about using Zacks.com? Send us an email and we might answer it next.
Hello and welcome back to Free Lunch. Today we're breaking down why Roku is a Zacks Rank #1 strong buy stock. Roku is one of the only pure play streaming TV stocks aside from Netflix. The firm sells devices that allows users to watch various streaming services all in one place, similar to Apple TV, Amazon Fire TV, and other offerings. The company also has its own channel that allows users to watch movies and TV shows for free. And a growing part of Roku's business is its ad unit that allows marketers to reach people in a cord-cutting world, sponsor various downloads, and more. So now let's dive into why Roku looks so strong. As always, I like to take a start by looking at the company's website. So we'll see, as I mentioned, they sell various different devices. So their products, their TVs are as well. They're not technically their devices. They're not made by the company, but their software and electronics are built in. So there's TCL, Sharp, all these different various offerings are part of that Roku TV. And then we can see their different streaming players, various small devices you plug into the back of your TV through the HDMI output. And as I mentioned, they compete against Apple and various Google devices and Amazon devices as well. And then the Roku channel, as I mentioned, is of a growing part of their business where they can attract advertisers. As I mentioned, advertisers are trying to reach customers anywhere they can in this world where more and more people are cutting the cord and there's really no reason to watch ads at any point. So now I want to take a quick look at the company's price movement over the last 2 years. Roku basically went public about 2 years ago, so we're just going to look at a 2-year span. So we can see that Roku shares are up 335% since going public. This compares really favorably to you could say its only real peer in this exact streaming world, Netflix, and then overall its industry's average as well. It's crushed it. So then we're going to look over the last year. We can see Roku is up 66%. And then we can see year to date, and then I'll bring back up Netflix here as well. We can see year to date, Roku is up 250%, which is crushing its industry, and Netflix, which is basically moved sideways. We can see, however, that recently the stock took a pretty big tumble. This is coming about September 17th is maybe the exact date. And this came right after Comcast and Facebook both announced that they would kind of bolster their streaming device offerings. So that's the reason for the big fall and part of the reason why Roku looks kind of impressive at the moment. And then I'm going to take another look at Roku here. So we can see that this is Roku stock over, we're going to go back to this 2-year stretch. So this is Roku stock over the last 2 years, and we can see that this is their 50-day moving average. And we can see that the stock really doesn't like to stay below that moving average for too long. So it dropped sharply below that moving average recently. So if the trend seems to continue, that we could see that stock bounce back up in that direction relatively soon. And now I want to take a look at the company's estimates to give people a sense of what we're expecting. So for the current quarter, Q3, we're calling for roughly 49% top line growth. And then for the fourth quarter, we're calling for about 39% top line growth. For the full year, about 45.8%. And then that following year, fiscal 2020, we're calling for about 34% growth, all the way up to about 1.5 billion. And investors will probably see that the company is trending in the bit of a wrong direction in terms of its earnings outlook, but that's something that the company has talked about as they try to expand more heavily internationally, which is where a large part of their growth will come going forward as Netflix and other streaming firms figure out that U.S. market is becoming quickly saturated. We will see, however, that for fiscal 2020, we've had some positive earnings estimate revisions over the last several days. So that's a big part of the reason why Roku is the Zacks Rank #1 strong buy stock. So in the end, Roku operates a business that will remain valuable in the streaming age, especially as new players such as Disney and Apple enter the market in November. Plus, shares of Roku currently rest roughly 40% below their 52-week highs, which could give the stock plenty of room to run going forward. And that does it for today's episode of Free Lunch. Also, make sure to check out our Zacks Ultimate and tune into Paper Traders, which is live in this block on Wednesdays. Once again, I'm your host, Ben Rains, and we'll be back next time with more up-to-date market news and a new top stock pick.